Good evening, good evening. Put that there. Go like this, go like that. Raven boy, good evening. How are you today? That ain't it. There we go. That's it. And go over to there. Alrighty, alrighty. Raven, how you doing? JB, what's going on? Okay, done, and that, and live. There we go. So, don't have any idea what's going on over there. All right, that being said, everything seems to be going. Testing, testing the volume. Let's go a little bit louder, right about there. Sounds about right. Bentley, good evening, and how are you today? Jay, what's happening? All right, Travis, Jesus, Shanas, good evening. BJ Austin, Wild Animals, Mikey C, Christian, D Coffee, 54 Mules. Chuck, how you doing, Chuck? Miguel, que pasa, amigo? Mary June, good evening. Elbin Hall, Jackie, what's going on? Franca, USA, good evening, good evening. Melatonin, what's happening over there? William, Kelly, hey, what's happening there? All right, Cross on Borders. Okay, interesting name. Cool beans. All right. Well, let's get started and let's see what's going on this evening. All right, first and foremost, my name is James. This is Dividend Stock Talk, where I go over all the trades I do on a daily basis. Not that I actually trade every day, okay? I'm more of a trade once a week kind of guy. Let me explain that. My voice, holy cow. Let me explain that for a minute. Now, when I say I only trade on a weekly basis, I do most of my trades on Monday. That allows me to sit back, relax, and just see what my positions are doing. Because I'm not looking to trade every day. I'm doing great, Bentley. Thank you for asking. Arjun Zeus, how are you today? Jags, we're going to take a look at Nike in a second. Red Wing, Bike Mat. Bike Mat? No. Buzz Mat. Sorry about that. Bike Mat, Buzz Mat. Too much going on. All right. SMCI. Oh my goodness. I am in it at 55. What happened? Joseet, good evening. Okay, now melatonin, you know how I feel about SMCI. Well, let's take a gander of it, see if I can help you out a little bit. Not that I'm a fan. SMCI. You're in it at 55. Holy cow, dude. Okay, Jim Bowman, how are you today? Peary, good evening. Allure, Lata, good evening. Bernie Dog, what's happening? Bernie Dog, hold that thought for 1 second. Wanda Gosman, cool. Good evening. Hi. Chase Gordon wants to take a look at YYY in QYLD. Well, I could say the same thing. QYLD, hey, what's going on, Burn Dog? Chase, why? QYLD, why? It's just, why? I'm totally clueless on it. Am. All right, SMCI, Super Micro Computers. Well, oh, that was a mistake. Yeah. Well, melatonin, that's why we're here every night. Take a look at good stocks. Now, we've looked at this many a times, and from what I understand, SMCI has been having some bookkeeping issues. I could be wrong. All right, so somebody wants to look at QYLD. All right. QYLD. I have no idea why. Okay, so this is my opinion of QYLD. 17 April, 16 May, 15 August, those are months, which means you can only trade it once a month in a covered call type scenario. And that's what I'm trying to do. I'm trying to get a simple, safe, predictable, consistent 1% per week. Oh my God, my voice is just disappearing. That ought to be a fun night then, shouldn't it? So, Chase, I don't do monthly optionable stocks. Now, the reason being, I'm looking for a weekly cash flow. The only way you're going to get weekly cash flow from QYLD is to sit in front of the computer and stare at this thing all day long, looking for opportunities to buy and sell. That's not what I'm looking for. I'm only looking to jump in once a week, get in, make my 1%, and get out. Bill, what is QYLD? It's an ETF that some people like. You know, some people like it. Okay. Also, why? Amplify High Income ETF. Again, another monthly. 17 April, 16 May, 15 August, 21 November. See, those numbers just aren't going to work for me. So are you only writing covered calls? Yeah, I'm looking for a safe, predictable income. The only way you can do that is buying a good, decent company that's in an uptrend. A covered call is the safest, simplest, and most predictable trading strategy. It's kind of like going to the casino, going to Vegas. Okay, instead of gambling, okay, instead of being a player, being the house, because the house makes all the money. Okay, I'm not looking for, huge amounts. A little here, a little there, a little there, a little here, All right. Okay, making a difference. Wants to take a look at Advanced Auto Parts, yeah, AAP. Okay, so maybe AAP is going to be something we can look at. Yep, it's a weekly. I like weeklies. I'm going to just get rid of this because we got 1 day left. It's not going to give us anything. All right. All right, so Chase, sorry about that. Y and QYLD are a no. Sorry, the numbers just don't work for what I'm looking for. What I'm looking for is a way to invest on a consistent basis to give me weekly cash flow. Now, both Y and QYLD, they may be great for other applications, but for this application, it just doesn't fit. Okay, I'm not saying no, it's not a good investment. I'm just saying it's not for me. It can't give me weekly cash flow without interrupting my life. And yeah, I have no desire to do that. Okay? Okay, so making a difference, let's check it out. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Up, down, down, up, down, up, down. Well, what's it doing right now? Well, right now, we're going to zoom into that and take a look a little bit closer to see, is this going to be a good play or not? Now, I do have some, so I let you guys know whenever I own something, just to. Warner Guzman, cool beans, how you doing today? Bentley, I'm subscribing. Okay, what does fund mean? Okay. Monthly dividends sound good right about now. Well, Chase, what about weekly? Okay, a dividend that pays monthly, great. But wouldn't it be better to get weekly cash flow rather than monthly? Okay, I'm just curious. Blonde PT, you're giving me knowledge that I never had explored. Well, bloody jolly good there, lassie. UA. What about hydrogen energy stock? It's not 20 years old. I'm very specific at the companies I like to look at. Is it consistently profitable? Okay, now hydrogen energy, it's been around for a long time, but there aren't any leaders in the forefront. Nothing that has consistency of profitability for 2 decades. But, I'm not saying that's a bad idea. I'm just saying it just doesn't fit this application. Thanks for taking a look at that, James. I had to ask. All right, no problem. Peter, very true. Why? Very true. Yep, get that one. Okay, Jose. It's like everybody over on this TikTok channel, they don't say anything. What is it with you guys over there? Just coming by, saying hi. John Vist, how you doing today? Tubbyberry, how much capital do you recommend to start with? Okay, Tubby, everybody is different. I have no idea what your goals are. Okay, are you 15 years away from retiring? 5 years, 10 years, 30 years? I have no idea. What is your plan? Why are you wanting to invest? What is it you are looking for? We all have different ideas. Okay, now, I'm going to let you guys know something ahead of time. I answer each and every individual question, okay? As long as it's a good question, all right? What stocks would I suggest? Yahweh, okay? We're looking at good quality stocks. Are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and, of course, Warren Buffett's list. You can go to Google and search those lists. Warren Buffett's list, 2025. And it'll actually give you every single stock that Warren Buffett owns. Okay, and then the Dividend Kings. Well, who are the Dividend Kings? You know, who are the Dividend Champions? Who are the Dividend Contenders? And what makes them so special as opposed to all the other companies? Antoine, is Alcoa too high? I was going to buy some tomorrow. Okay, Antoine, we're going to take a look at that in 1 second. You ready? Right now, we're looking at Advanced Auto Parts. Now, I do have some Advanced Auto Parts. I forget where. I think I got in at 35. I think. I don't really pay much attention to it, and the reason being I don't pay much attention to it because once I buy a stock, I treat it as an asset. Is it going to give me cash flow? Is it going to give me weekly cash flow every single week? Okay, now my goal is 1% a week. Okay, so Advanced Auto Parts, yeah, it's giving me more than 1% every single week. So why not? Why not take a look at it? Why not question, is it a good company? Do they have a future? Are they going to be around? Is this a safe place to put my money? Well, it was good enough for me to put a bunch of money into it for me. Okay, now let's take a closer look. High, low, we've seen that already. Let's take a look at the numbers as if I was going to buy it tomorrow and see, does it fit? Nice guy. What about AEM? All right, let me write AEM down and we'll take a gander at AEM. All right, nice guy. We'll take a gander at that one. AEM. All right, Wolf 78. PRU is Prudential. Prudential does not have weekly options. No, right off the bat. It's like it would just be wasting our time taking a look at it. Now, there's a reason why I only like dividend stocks. Because dividend stocks have a tendency to move predictably, consistently. Now, isn't that strange? They move consistently, predictably. So when it's getting ready to move up, I want to know. Well, they do it right about the same time every single year. And knowing that kind of information gives me what I feel to be a little bit of an edge. Because when I'm trading, I want the odds and the probabilities in my favor. If I'm going to put my time, my effort, and my money into something, I want to make sure that I'm right. So I want to be in a position where even if the stocks go down, I'm still making money off of it. That's my goal. A simple, safe, predictable, consistent 1% every single week. That's what we're looking for. So let's take a look at Advanced Auto Parts and see, is it a good idea? A year ago was the high of the year for Advanced Auto Parts, 79.67. Well, look at where it is now. That's almost $80. Now it's at 30. That is more than a 50% drop. Okay, just because it's a 50% drop, well, let's see what the numbers look like. And if this is the bottom right here. Now, Advanced Auto Parts, they're in almost every major city. It's a big chain. It's a big company. So do you think it's worthy to get into and hold on to? Wow. All righty. Do you think so? Well, let's check it out and see if it's a good idea. There's something in there. It's just not coming up. Don't sound good. The last 90 days. Now, the reason why I want to show you the last 90 days, oh God, it sounds terrible. It's the last 3 months. The last 3 months, hold on a second. It's me, Dan. There's another guy talking about what you are talking about too. Imagine that. All right, so as I was saying, it's currently at 30.88, which is more than a 50% drop. Here's the 90-day high. Here's the 90-day bottom. Look at the movement. Up, down, up, down, up, down. Well, what's going on here? Now, if this is the bottom of the year, you're going to make most of your money buying at the low and selling at the high. Well, that's a big difference between 50 and 30. It's a $20 difference between the two. So where's it going to go now? Well, let's zoom into the last 30 days because the last 30 days gives us a better idea of where do we think it's going next. Now, one of the reasons why I like weekly options is because it gives me 5-day increments. Can I figure out where it's going to be in a month? Well, let's take a look at this month. 38 jumps up to 42, back down to 39, big drop to 29, back up to 34, now we're at 30. Okay, that's 30 days. Okay, figuring out where it's going to be in 5 days, well, the way it looks like it's still coming down around here. Okay, fine. Where's it going to be in 30 days from now? Well, if I knew that, my life would be totally different. Because trying to figure out where a stock's going to be in 30 days is not very easy. That's why I don't do monthly options. Because you're going to do on a covered call. Because you buy the stock, you own it. Great, wonderful. Now you're selling it to someone else at a predetermined price at a predetermined date somewhere in the future. Well, it's not that easy. Next Friday, that's easy. I think it's going to be around 30 by next Friday. That part's easy. 30 days, no. I just don't do it. It doesn't work for me. Well, let's just leave it at that. Monthly options just don't work for me. Okay? It's me, Dan. It's dangerous to sell covered calls and selling puts in this market. Dan, I wouldn't exactly say that. You're not even reading the charts correctly. Okay, nice guy. I own 6 call contracts on AEM with a 75 cost basis and 125 strike that expires tomorrow. Yep, okay. So Dan, you're saying I'm not reading the charts correctly? Well, Dan, I'm looking for the high. Oh, yeah. Okay, the high is right there, Dan. You can argue all you want, but you cannot ignore the fact that that's the highest it has been all month. And then look for the low. Well, you can't argue with that one either. That's the low. So what usually happens when it gets a high down to a bottom, because when you're up here, more than likely this is profit taking and then this is panicking. Because this is what happened, what they call that Liberation Day, and everybody panicked and started selling. Yeah, okay, so here we are. Bounces up, now it's coming back down again. Not a time to jump in. I'm not quite sure. Why would you want to hold a falling asset right now? The market is in a free fall. Okay, Dan, I appreciate your input. Really, I do. Okay, now, not quite sure, Dan, if you even did any research of who you're listening to. 'Cause I've been doing this for about 30 years, and I have you're stuck holding stocks. No, Dan, I'm not. I'm creating a cash flow machine that pays me 1% every single week. Every week. I'll give you, for instance, if my account has $100,000 in it and I get $1,000 every single week, that's 1% every single week. Okay? Yeah, okay. So if I'm doing it successfully every single week, all I'm doing is just sharing what I'm doing. I'm not telling anybody to do anything. Okay? As a matter of fact, I always tell people, don't listen to a word I say. Okay? Do your own research. Does it make sense? Does it look like something you want to own? Well, I already own it, but by looking at this right here, I wouldn't be buying it this week or next week. I'd personally be waiting for a new bottom, which should be hypothetically somewhere around 29, 28, 30, somewhere in this area here. Because she's coming down now, eventually people are going to say, oh, Advanced Auto Parts at this price, I'm going to buy some. I can guarantee you are not making 1%. Well, thank you, Dan. You're right. Last week I made 1.2. The week before I made 4%. Oh, Dan, I just love naysayers. I do, Mr. Dan. Here's my website, Mr. Dan. Say up here, Weekly Trades 2025. Now, Dan, I got 7 accounts. 7 accounts. I share 3 of them publicly. You are more than happy to go check out the numbers for yourself. There's over 100 trades so far this year, and I've only lost twice. 2 losses in over 100 trades. Here they are right here. Click on any one. It opens right up. Here's the timestamp over here. Okay, it tells you what kind of a trade it was. It tells you how many I bought and sold, what stock it was, what the dates were, what are the call options, what are the prices, what are the profits. Okay, so for instance, Mr. Dan, let's get out of here. Okay, the very first week of January, 6.1% in this account, 1.8 in this, 4.2 in this one. I share each and every trade. You don't believe me? Hey, I'm not here to prove anything to anyone. 2.3, 1.7, 1.8. That's week 2. Week 3, 4.8, 3.6, 1.8. You can go look at all of them. Add them all up. All right? The amount of money I brought in since the beginning of the year. 40% account 1, 29% account 2, 47% in account number 3 for, what was that, three months? The first quarter, January, February, March. Every single trade's up there, dude. All the numbers are there. Check it yourself. I'm pretty sure my math is kind of accurate doing this for a while. And, no, Dan, the strategy works in an up market or a down market. Show me your live account. Oh my God, I love it when people are so freaking rude. There it is right there. Okay, there's 1, here's 2, here's 3, here's 4. Where was I? Right there. Nope, wait a second. That's where I am. Anyway, besides the point, you don't believe me? Fine, don't really care. It is what it is. Dan, it's not a market. It's a sector. Okay. Strategy only works when the market goes up. No, that ain't true either. Okay, let me see. Yep. Show the P&L. So, Dan, you said that I can't make 1% every week. Well, I can make 1% every week, even if my stocks are down from what I bought them at. Okay, I didn't say my stocks were up. I said I make 1% every single week is what I said. Don't mix up the words. Don't misinterpret what I'm saying. All right, let's keep on keeping on. Okay, let's get out of here. Let's go. Oh, let's get out of that one. Don't need that one. All right, here we are, back here. Where I missed some of these questions. Do all weekly dividends have a same dividend payout date? No, Pete. Now, Pete, you're putting in words that don't belong. There is nowhere, anywhere that I say that any company pays a weekly dividend. What I'm saying is I invest in dividend stocks using weekly stock options. So dividend stocks to create weekly cash flow using call options. Okay, because call options trade every single week. Hertz and Dollar Tree ripped today. Uh-oh, I got a bunch of Hertz. All right, Pete. Grocery prices have gone up a lot during the last 4 years. It's wise to invest in grocery stores, fast food restaurants, and in anything related to anything anytime soon. Do you think it will rebound soon? Now, Pete, that's an interesting question. That's not the way I invest. I'm not looking for companies that are hot on the hot topic or, I don't know, moving up fast. I like companies that moments. Okay, meaning they're consistently profitable for at least 2 decades. So take a look at the Dividend Kings. 54 companies that have increased their profits for 5 decades. Okay, and they increase their dividends to their shareholders because the dividend is a portion of the profits that the companies gives back to the shareholders. So if the company's consistently profitable, they consistently increase their dividends. Okay, that's what I'm looking for. Companies that are consistently profitable. Yes, legendary, it is the American market. Meaning, if I buy low soon, is it worth it? Well, Pete, never invest in anything you don't understand or you don't want to hold on to for the long term. Okay? Investing is slow, and this, what I'm doing, is not the same. You can, but not every week. Oh, everyone's so macro-minded. Your thoughts on Maine? Oh, Shaq. Maine, I believe, is a monthly option. Hold on, we're still on Advanced Auto Parts. Yeah, so my conclusion on Advanced Auto Parts, even though I already own some, I wouldn't be jumping in anytime soon until it finds a new bottom. That's me. I say the stock, when it's at a high, people start taking profits. When people start taking profits, the stocks go down. When the stock hits a bottom, and we all know where the bottom is, because you got lots of people staring at this thing on the other side of the screen, waiting for a good place to jump in. Well, how low is it? There's a buyer for everything if the price is right. So where and when is the bottom for Advanced Auto Parts? Well, only we know. We're the buyers and the sellers. If we think Advanced Auto Parts is a great deal at 29, when it hits 29, people will start buying. Then it turns around and goes back up again. Until we decide, me and you guys, we decide, all right, it's a great deal at 29, it's a great deal at 30, whatever we believe. Okay, and then we start buying and then the stocks go up. Okay, that's just the way it is. You know, there's only one number that's created by one person, and that's the market maker. He sets the opening price every day. But it's you and me who create the high of the day and the low of the day. Okay, that's what we do. Because if we're buying, the stock price goes up. If we're selling, the stock price goes down. Okay? All right. What else do we got? What are we doing? What are we doing? What are we doing? Dear live stream, how are you today? Legendary Shivana, 1% is enough for you? No, you're misinterpreting what I'm saying. 1% every single week. Okay, so if I have, let's say, $100,000 in an account, I want $1,000 every single week. If I have $500,000, well, I want $5,000 every single week. That's my strategy. That's what I'm looking for. Legendary depends on what to put in. Always depending on that because of inflation. Tom, I don't see why people get triggered about what a person make or how they trade. Instead, take what you didn't know and just proceed to do what you want and how you feel. Cool beans. Paul, how are you doing today? Oh, listen to James. He knows what he's talking about. Following him for up and even downturn. Cool. Legendary Savannah, risking $1 million for $1,000 per week. Wait a second. No. 100,000. Okay, $100,000. 1% of 100,000 is one. Wait a minute, 100,000. 1% of $100,000 account is $1,000 a week. Okay, $1,000 a week is $52,000 a year in simple interest, compounded at 64% a year. You can actually double your money in 14 to 16 months at 1% every single week if you don't take it out. And if it was $1 million, 1% of $1 million is $10,000 a week. Okay. Chase, how do you trade naked positions? I don't. Naked calls, naked puts. Does truth, direction, and time boost the probability of the trade going in your favor? Oh my goodness. Interesting questions. Now, number one, I don't suggest anybody do naked trading, okay? Naked puts, naked calls. I don't do those kind of risks. I stick to simple, safe, predictable, consistent. That's what I'm sticking to. Okay, if you're looking for anything other than that, you're at the wrong place. All right, anyway, Finley, are you bullish or bearish on banks earnings tomorrow? Nope. Gordon, can you drop your website in the chat on YouTube? You're on my website on YouTube. Okay, go right in the bio. It'll take you to the link to the website, The 10MinuteTrader. Not now. What are your thoughts on Jasmine? Never heard of it. And do you invest long-term or short-term? Ooh, that's one of the best questions I've got all night. It's me, Dan. What do you got over here? Your asset depreciation isn't being taken into consideration. Sure, you can make 1% premium. Your application is wrecked. Gold mining, okay. Thank you. Thank you for that, Dan. I like it. I like it when people tell me what to do. It just makes my day. How can I follow your trade to copy your wins? Oh, you got to sign up for my morning trading group. It's a private group, and it's on my website. Okay, I try not to sell anything while I'm live. Okay, so if you want to ask those questions, just give me a call. No, send me your number. I'll give you a call. All right, let's keep on keeping on. All right, what works for you in stocks with HGCX company intentions for money? Bill, that's an interesting question. I have no idea who HGCX is. Now, just, hey, it's Scotty Scott, what's happening? Pete, so what market do you think has the most potential nowadays? It's an interesting question, Pete. Pete, I stick with the classics. If a company is consistently profitable, I will invest in it. If the timing is right and the numbers work. Okay, the trading strategy is simple. Number one, never buy something you don't understand. Number two, never sell at a loss. It defeats the purpose. Number three, make sure the company's consistently profitable. Number four, weekly options only. And number five, make sure the numbers work. Now, we're going to do a couple of sample trades as the night progresses. I'm going to try to answer every single question before 11:30. Okay, hello, James. How can we get weekly cash flow from dividends when the price of the stock goes down? Okay, so no name, because there's no name there. No, how can you get weekly cash flow from dividends? Well, nobody said anything about weekly cash flow from dividends. Dividend stocks, the same thing, almost. I'm not collecting it. In fact, I don't want to collect the dividend. I want to buy the stock just before the dividend date because the stock has a tendency to go up in value. And when it does, I want to get in, I want to get out, and then I want to move on to the next one. It's that simple. Okay, why hold on to something? Because everything goes up and then it goes down. Everything goes up and then it goes down. If you alternate, when a stock goes up, great, ride it to the top or ride it as high as you think is profitable for you. Because it's not a profit until you take it. And if you don't take a profit, it will come down eventually, because what goes up comes down all the time. So jump in as it goes up, jump off as it's going up, and then jump into something else. Because there's 10,036 different companies you can invest in. They don't all move at the same time in the same direction. Think about it. There's only two directions it goes, up or down. Okay, so if this is going down, there's something else that's going up. So as it's going up, I jump in that one, I take the short ride. Once it goes up 1 or 2%, I jump out. Because I'm not greedy. I just want 1% a week. Okay, it's simple, it's easy, it's predictable, and I can do it consistently. Lisa, good evening, and how are you doing today? Okay, Pele wants to see about Nike. All right, give me a chance. Hold on a second. Good evening. What do you think about TJX? Do you have any or would you buy it? Oh, well, let's find out. TJX. TJX. All right, it would help if I actually put it in. TJX. All right, let's try it again. TJX. Third time's a charm. Here we go. Nope. Okay. Simple. It should take you 3 to 4 seconds to look at a chart and analyze it. Okay. Where's the high? Where's the low? Where was it? Where is it? What's the direction? Sideways, down, up, down. Yeah. No. It's at the high 2 days ago or yesterday. Now it's coming down. Fine. When it comes down, finds a new bottom, wherever that may be, then I'll take a look at it again. But until then, no, I'm not following it down. Sorry, Lisa. Okay, nice guy, gold mining. You can't get a weekly cash flow from gold mining. Well, not in the manner in which I want to do it. I don't want to go there and dig for gold. Yeah, you can get it digging for it. Yeah, no, thank you. How much capital do you recommend to start with? Okay, Tubby, we already did that one. Okay, everybody's different. Everyone's going to have a different amount to start out with. Uh-oh, I missed all these questions. Okay, Bill, HGCX. What the heck is that? HGCX. It's not even a stock, dude. What the hell am I looking at that for? Okay, Wolf, Prue, it's monthly. Don't do that one. SoFi. I don't think SoFi really has the dividends that we're looking for. Okay, so I'm specifically looking for consistency of profitability. What the hell am I looking at? Not that. This is what we're looking at. Okay, SoFi. SOFI. All right, try it one more time. SOFI. Why do I have to do things 3 times in order for things to work? There it is right there. Okay, now, first and foremost, financial website. You should have one at your fingertips. You should know where to look. I like Yahoo Finance. Now, I tried Google Finance, and it wasn't as easy for me to navigate that because I know where everything is on Yahoo Finance. I've been using it for over 20 years, so I hate the fact that they keep changing it. Every 5 or 10 years, they'll change everything. I had this really cool software that worked on Yahoo Finance data. And then they changed it and messed everything up. It was really cool. All right, so anyway, I want to look at historical data because I want to see how often does SoFi increase their dividends, or how consistently profitable are they? Okay, historical prices. I want to go right to the dividends. Click on that, drop down window, dividends only. Oh, look at that. There are no dividends in the selected time period. So SoFi, no, sorry. Oh, I'll be right back. Okay. Pete, most companies will scramble when they're losing money. In your experience, how long should someone hold on to their stock to see money coming back to them or know when to quit? Oh, Pete. All right, here's the thing, Pete. Now, it does happen once in a while, but not very often does a company that's 50 to 100 years old actually fold up and go home. Okay? I don't look at anything personally for me. I mean, I'll look at whatever you want me to look at. But for me to invest my money in, it's got to have 2 decades of profits, which means they got to be at least a quarter of a century old. And most companies that have been that established, well, they usually don't go belly up, usually. Okay? So once you see a company starting to cut its dividends, okay, starting to not be as profitable, well, why would you keep your money there? Let's keep going. All right. Johnny Viss, good evening. Amanda, good evening. Amanda Ramirez, hello from Texas. Wolf wants to take a look at EPD. EPD. Okay. So EPD has been profitable since the 1990s. Look at this. 1998. Look at the dividends as they slowly increase. Okay? 19, 20, 21, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44. This is, I've never seen this before. Seriously, I've never seen a company sequentially increase their dividends. Let's go back for a second. All right, hold on. It's almost sequentially. 11, all right, there's no 12, but there's 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 20. It's like every year they increase it, or every 6 months they increase it by 1 penny. So yeah, EPD has a great track record on increasing their profits. Oh, great, wonderful. Let's see what the chart looks like. Take 3 seconds. High, low, where was it? Where is it? Look at the movement. Sideways, up, down, up, down. Now it's going back up again. I want to see what's going on right here. So let's continue. Alrighty, where are we? EPD. A year ago, we're at 28.48. The bottom of the year, which is the beginning of August, 27.39 is the bottom of the year. Then she shoots up, finds the high of the year at 34.63, and that was the end of November. All right, so the last 90 days, or the last 3 months, okay, the last 3 months, look at this. Sideways, big drop, went up, now she's coming back down again. So here's an interesting thing when you see a chart that looks kind of like this. Basically going sideways. All right, no big thing here, all right? Here's the drop right here. Liberation Day. We all know what that was, April 2nd. Stock drops, finds a new bottom right here after everybody panics. Okay, great time to buy. If you can buy at the bottom of the year, it's always the best time to buy because it only comes once. Could that be it? It could be. All right, so 27 is the bottom here. Then she jumps up to 31.50. Okay, that right there caused a nice little profit taking session. Okay, so from 27 to 31.5, that's $4.50. So $4.50 on a $28 stock is right around 13 to 14%. That little move right there within a week. So if you can hit a 10 to 15% profit in a week, well, yeah, you should take it. And today they started taking that profit. Or was there more panic? I don't know. Depends on which news source you want to listen to. Okay? I don't listen to the news because that's never anything good. But you can't hide from the facts and you can't hide from the numbers. 30 days ago, it was here. The high of the 30-day period is right there. Then she drops. Here's the bottom. You can't argue with that. Now, from the bottom here to the top today, well, that's more than 15%. Okay, yeah, 15% increase in 1 week. People can take profits. Now it's coming down. Not the greatest time to jump into EPD, but I'm not telling you to do that. I'm just reading the numbers. Okay? The high, profit taking or panic selling, whatever way you want to look at it. See, it was going great right here, and then panic selling, it dropped right down here. Okay. Now it went up. Now we have profit taking. Now it's coming back down again. Okay. Okay, why is Warren Buffett still holding his cash? Because he thinks it's going to go lower. Simple. Jay, I ordered 2 options on Procter & Gamble and Lowe's this week and sold covered calls. I'm down almost 1,200. Oh, Jay, I'd love to see what you did because I don't have Procter & Gamble and I don't have Lowe's and I don't know why I didn't buy them, but they are on my list. And if it was a good trade, I would have jumped in myself. So let's take a look at Procter & Gamble. Interesting. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down, up, down, up. Okay, so what's going on now? Okay, that is an interesting chart. can't really tell heads or tails, but you can see where the high is, and you can't see where the low is, and you can't see where it's going. Okay, 157, 175, kind of like channeling sideways, kind of. Well, let's take a deeper look. The bottom of a year ago, we're at 156. We bottomed out at 153. The high of the year was at the end of November. That was 180.57. Okay, the last 90 days, okay, the high, low look at the movement. Up, down, up, down, up. Now it's coming back down again. Okay, segmental, all right, choose little segments, little bits and pieces, okay? Because if you're thinking of jumping in, look at the last 30 days. Where is the flow going? The high's here, the low's there. You can't really argue with it. Okay, so the last 30 days, again, up, down, up, down, up. Now it's coming back down again. Not a great time to jump into Procter & Gamble. But you said you ordered 2 options each of Procter & Gamble. Because I'm not quite sure. When you say you ordered 2 options, did you buy 2 options or did you sell 2 options? I'm not quite sure what you mean there. Liz, good evening. Stevie, what's going on? Cole, not even 5 minutes ago, we already looked at EPD this evening. Already looked at it. Okay, so Jay, if you can let me know exactly what trade you did, because what you're saying here, I ordered 2 options, each of Procter & Gamble and Lowe's this week, and sold covered calls. I'm down almost $1,200. Okay, without me seeing what you did, I can't really explain it. Okay, other than I don't have Procter & Gamble and I don't have Lowe's. But I did look at both of them a couple of weeks ago. SG Treading Sunil Shen. Good morning. Good morning to you. Alex Tracy, how often do you go live here to learn? I go live every evening at 9 p.m. and I finish up at 11:30. Yeah, baby's in the house. Was there an entry on Bank of America Monday, Tuesday? Give me a second, Scott. All right, so I'm finished with Procter & Gamble. Let's take a look at Lowe's and find out what's going on there. Almost the same thing. The high, the low, where was it? Where is it? Up, down, up, down, up, down. Now what's she's doing now? Well, let's zoom into that, take a closer look. A year ago, Lowe's was at 229. The high of the year, 281, and that was back in the middle of October. Well, look at the last 90 days. Okay, you can't mess that one up. High, low, look, it's up, down, up, down, up, down, up, down. Okay, not the time to jump into either one of those. Now, I'm not quite sure, Jay, like I said, if I can see exactly what you did, maybe I can give you an idea of what you could have done to not lose money. Because my number one objective in my morning trading group is to make sure nobody loses any money on my watch. So yeah, you get to see every trade that I do, and I also get to see the trades that you do if you allow me to. And I'll say, yeah, that's great, but what if this happens, or what if that happens? There might be a safer way that you are not seeing that I might be able to see. I need help for sure. All right, Jay, I'm not quite sure where. Oh, just got here. Cool beans. All righty. Okay, Fatfish. Good evening, Bill. OQF is very important on interesting from yesterday. OQF. Bill, well, let's take a look at it. VIP Patron. I'm sorry, Jay. I'm a little bit lost at the moment. I'm not familiar with that at the moment. I know I should be because it's my website, but my mind is focused on this at the moment, and I like to focus on one thing at a time. So if you want, send me a DM. a direct message, and I will, with your phone number, I'll give you a call. We can chat. Okay? I'm all for talking to people. Love talking to people. Okay. Pete, there's some place I want to put into NVIDIA and Spotify. The money seems to be worth it. I think they'll be around for a while. All right, Pete, but I can't tell you what to do, okay? And I wouldn't touch either one of those if it was me. And there's a perfectly good reason why I wouldn't do it. Well, NVIDIA's not 20 years old, neither is Spotify, okay? NVIDIA's not profitable, okay? Spotify, I don't know. They're too new, okay? I look at, Pete, go take a look at the numbers, the serious numbers. What's the cash flow coming in? What's the earnings per share? What's the revenue per share? What are the dividends, and how consistently have they increased their dividends? And what does their profitability look like? What does their forecast look like? Okay, I like companies that have a lot more historical performance. I'm old school, terribly sorry. I grew up in the 70s and 80s, okay? All right, so Bill, you think OQF is good, huh? Well, let's take a look at OQF. All right, I'm not going to do lows because it's clear to see. Here's the bottom right here. She went up, now she's coming back down again. Okay, I don't buy as it's falling. Now, if she hits bottom, then turns around, I'll take a look at it. But that doesn't look that appetizing. And like I said earlier, without seeing the whole picture, I can't wrap my head around why you're losing or why you lost money. You said you're down almost 1,200. Well, down is one thing, lost is another. Okay, are your stocks down in value, or did you lose 1,200 bucks? There's a big difference because stocks go up and stocks go down. Look, 270, now it's at 205. Does the number of what you paid for the stock have any relationship whatsoever to the dividend that you collect? Simply put, if Lowe's is paying $1 per share dividend, does the guy who paid $205 get a different dividend than the guy who pays $270? If I'm looking for cash flow, I really don't care what it costs, as long as the cash flow consistently comes in. Stocks are down only. Well, then you haven't lost anything. If you never sell for less than what you paid, you don't lose. Okay, just because the valuation is down. That's like when you buy a house. Okay, you might buy it at 100 grand. Next year, it might be worth 90. The year after that, it might be worth 200. The year after that, it might be 125. It goes up, it goes down. But does it give you a roof over your head and some place to harbor your family? Well, that's what houses do. Well, what do stocks do? Stocks allow you to get, well, in the manner in which I'm teaching, stocks allow me cash flow on a weekly basis. Okay? Now, the values do go up and the values do go down. I really don't care. Because if it's giving me 1% every single week, even if it's going down, well, I have no intention on selling it. Okay? That's like the cow analogy I used to give. If I bought a cow and it gives me a gallon of milk every week, great, I'm happy. But what happens when she gives me a half a gallon? Do I get rid of it? No. I just said, okay, let's take better care of it. Let's hope that the people taking care of the business start turning it around and start being profitable again, and then it starts going back up again. I don't want that one. Well, I do want that one, but no. Don't. What's the strategy you use? Alberto! ¿Qué pasa, Alberto? Chase, Gordon, Ricey. I hold 1,000 shares at 147. It doesn't pay a dividend. Should I take the cash or hold forever? That's 555%. Okay, Chase, number one, it ain't a profit till you take it. That's number one. Number two, nobody ever went broke taking profits. Number three, I can't tell you what to do. I have no idea about anything that's going on in your world or in your head. Does it make sense? Does it not make sense? One thing I don't ever want is somebody point in my direction and say I was wrong or I said this or I said that. No, I'm pretty blunt when I say I don't give advice. I'll show you the numbers. I'll give you my opinion. That's it. It's not advice. All right. Alberto, SoFi seems like a long winner. Beats EPS every earnings, sitting on a boatload of cash. I'm holding approximately 120,000 shares of SoFi at 716. I've accumulated most via CCS using premiums to buy more. Okay. My stop limit to sell is at 140 a share. Okay, Gordon, without seeing the whole picture, without putting all the pieces where they belong, it's hard for me to get my opinion on it. Okay, I'll tell you the same thing I tell everyone else. You want to have a conversation, you want me to take a look at it, send me your number, I'll give you a call. Tomorrow we'll sit, we'll take a look, and hey, it's not going to cost you anything. Okay, just a little bit of your time if I can squeeze it into my schedule. My grandson's coming over tomorrow, so me and him are going to hang out. Well, what do you do with a 5-year-old? You don't sit in the computer playing with stocks. We'll be, I don't know, who knows what we'll be doing. Oh, alrighty. Okay. Bill, let's take a look at OQF. All right. OQF. You must be calling from a different country, dude, because it's not an American stock. How much did you invest? I have no idea what you're talking about. How much did I invest into what over what time frame? You got to ask a better question. Okay? Because I could say I invested 25 cents and bought a newspaper this morning. I'm not quite sure that's what you had in mind. So if you ask a question that's extremely vague, well, I'm going to give you a vague answer. Ask me a good question. Get my mind thinking. Hi, Rizzo, what's happening? I would not get into advanced auto parts. Uh-oh. Now, Rizzo, I already have advanced auto parts. So I'm looking at it thinking, no, I wouldn't jump into it now. Just take a look at it here. Okay? Big drop, but back up. And it's back down again. No, I wouldn't jump into it now, but I already own it. So I have no intention on selling at a loss, but I do intend on creating cash flow from it every single week. Well, that's what I'm here for. Dividend investing for weekly cash flow. That's what I'm looking for. Samuel, how are you today? Honey and lemon. Well, actually, it's a ginger tea with honey in it. It does help, but not tonight. Let's keep on going. 50% drop is crazy. Yeah. Well, that's what happens. Stocks go up, stocks go down. Okay, if you are not ready for a 50% drop, then this is not a game you should be playing. Because if you take a look at almost any stock, okay, the high of the year is 40 bucks. Is 80 bucks. It's currently at 30 bucks. That's more than a 50% drop. Okay? If you're not ready for that, you shouldn't be playing this game. Now, I invest on a weekly basis. I jump in on Monday, and I like to be out on a Friday. Okay, every once in a while, I will roll something into the next week if it's consistently going to be profitable. James, would you still be doing this and believing in it if you were 5 years older? I'm not quite sure how to answer that one, Laurie, because I've been doing this for the past 30 years. The only reason you guys are seeing it now, well, is because the technology is available. Okay, my first interaction with the public was, what do you call that? A blog post that I started in 2011. Okay, and then in 2012, video became available. So me and my daughter started shooting video. Okay, after that, then it was a video and the blog post. Okay, then it was just videos. Now, in the past 2 years, it's been live video. And I don't do the blog anymore. I used to have a podcast too. Did a podcast for 4 years. I have over 900 episodes. And then they changed the whole thing on me. So now it's like, I don't even feel like doing the podcast anymore because they've changed it so much. Anyway. Advanced auto parts that cost half of the total that I see from your board. Yeah. What did I buy advanced auto parts at? Hold on a second. $39. All right. So I'm into advanced auto parts at 39, which is right about here. Okay. I don't mind. All right. No, but I wouldn't be buying it now. I already own it, but I wouldn't be buying more of it. Not yet, anyway. I'd wait for it to. Where's 39? Yeah, 39 is right about there. Anyway, let's keep on going. How much do you make a month? Oh, Rocco, if I make over 1% every single week, that's close to 4 or 5% per month. Bill, I am just really interested in what you're doing because I have many questions from my work projects. Okay, I'm not quite sure what that means, but I understand what it means, but I don't understand why. The stock is shit. Negative 50% in a month is insane drop. The stock will not go up. All right, thank you. Ooh, Wolf wants to take a look at Wally World. Okay, Wolf, give me a second. I'll see these questions over here. Alberto, Chase, too bad Ricey doesn't offer an option chain. It would suggest selling. Okay, yep. Alberto said, hi. Samuel, when stocks go down, is just an opportunity to buy more at a discount. That's one way of looking at it. Samuel, or selling puts to get in a price, going to collect a premium. Okay. Pete wants to look at Vodafone. Vodafone, do they even make phones anymore? Are they even still in business? I'm going to say no. Okay, I don't even need to look at this. Look at the choppiness. Okay, when you see this many gaps, that 12 million shares, holy shit, that's a lot of shares. Let's change that to single. 950, the 950s are, yeah, no. Here's another reason why I'm saying no to Vodafone. You see these numbers here? The premium, as soon as you go one strike out of the money, you're getting 0, 0, 0. Yeah. If you're wrong, you're SOL. No, I have no desire to do Vodafone. Okay, the numbers just don't work. Okay, is it a good premium at the money? No. Is it a premium one strike out of the money? No. The premiums are horrible. So Vodafone's a no, Pete. Sorry. Hey, Wolf wants to take a look at Wally World. Now, I do own some Wally World. I do own some Wally World, so let's take a look at that. WMT. And that's pulling back too. All right, the high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up, down. Okay, let's take a closer look. Because even though this right here looks lovely, what's going on here? Let's take a gander. What time frame do you look at, week or month? I look at the daily time frame. What time frame do you look at, week or month? You can't, right? 1% a week return is insane. I don't know if insane is insane good or insane bad. I don't know. That's got to be clarified. Chase, Alberto, I just wanted to buy and hold plus the just started back paying dividends. Okay. Dividends are okay. Real money is wheeling in a volatile but safe stock. I will Tesla puts weekly and CCS monthly. Okay, interesting. All right, let's keep on keeping on as we were going. Oh, is that drama? Shorting Babylon is smart. Okay. Do you have advanced auto? I have advanced auto parts. Yes, I do. Making a difference, AEO. Yeah, we'll take a look at that one. Alberto Val, covered calls. Well, I'm assuming covered calls will be CC. What's the S for? CC, I understand, covered calls. CCS, that one's a little bit on me. Jamar wants to take a look at Intel. Okay. Did you do Ford already? Nope, we haven't looked at Ford yet. I sold all my Ford, I believe, last week because it just made sense. All right, here we go. All right, so we're looking at Walmart first, and then we'll take a look at AEO. AEM, we haven't looked at that one either, AEO and AEM. All right, so currently we're at 91. 91.19, the 91's going for 190, the 92's going for 144, the 93, so all of those are giving over 1%. Well, the 1% I'm looking for is not the dividend, not the stock appreciation, but the insurance policy premium right there. You get that through what's called a stock option, because stock options are basically just insurance policies. Albert James, thanks for all the insight. Covered call, single, CCS, plural. Oh, bloody jolly good. Okay. All right, so look at it this way, Alberto. See, what you're talking about in your head, it makes sense because it's you in your little world. Now, I've done a lot of things in my life, fisherman, lobsterman, lumberman, contractor, plumber, electrical, you name it, I've probably done it. And each industry has their own abbreviations that make sense to everybody else in that industry. So as a stock investor, ITM, ATM, OTM, CC, those things make sense to me in this realm. That makes sense. Rob, new to investing. Invested $5,000 with 70% VTI, 20% VXUS, 10% SCHD. Economy is absolutely uncertain, but I don't want that to deter me from investing long-term, 20 to 30 years for retirement. Cool beans. Should I continue to invest into VTI and slowly add to the SCHD? In my opinion, no, and hell no. I don't like any one of those because I'm doing something totally different, Rob. Now, you're new here. You have no idea what it is I do. I'm looking for a simple, safe, predictable, consistent 1% per week. Now, 1% per week comes to over 50% per year. Okay? Now, what you're getting, now VTI, I'm not 100% sure what VTI is paying out. Let's take a quick look at it. Wait a minute. Did I finish what I was doing there? We're still on Wally World. Hold on a second. I'm going to get to those in a second. Let me finish up with Walmart. So the bottom is here, 60 bucks. Jumps up to 105. So from 60 to 105 is $40. That's 40. Give me a second. 50. Wait a minute. No. Wait a second. 50% increase. No, it's more than 50. Yeah, 50 would be 30. That'd be 90. 55. All right, but 60%. But a 60% increase from here to here. Okay, profit taking. That makes sense. Panic selling right there. Retracement, profit taking again. It all makes sense if you divide it up by what's going on in the market. Okay, so last year, 60 bucks and it jumped up. Great, awesome, wonderful. The economy was going to crap, so people going to Walmart, people going to Dollar Store, people going to Dollar General, people going to Dollar Tree. Yeah, Walmart and all those other companies soared. So at the beginning of the year, everything turned around. And then here, we had our panic selling. We had all our profit taken here, panic selling here, and then the retracement here, and then profit taken again. So let's zoom in a little closer, and you might be able to see it. The last 90 days, which is the last 3 months, right there. Okay, so here's the last 3 months. The high, the low, where was it? Where is it? Look at the movement. Up, down, up, down, up, down. Okay. Now is not the time for jumping in Wally World. Give it a couple of weeks, and it's going to drop. It'll find a new bottom, and then it should start going back up again, like it normally does. Normally. Okay, is it guaranteed? No. There's no guarantees in life. There's only 3 guarantees in life. That's it. Just 3. Let's keep moving on. So the last 30 days, right there, it makes more sense here. Okay? Went sideways, jumped up, dropped. Here it is right here. 2 days up, jump in, right there. They grab your profit, get out. Now she's coming back down again. That makes total sense. Not where I want to jump in. I would have jumped in probably last Wednesday. Okay? Monday, Tuesday, Wednesday, probably Thursday. I would have jumped in on Thursday and been out already. Let's keep on going. Make a difference, AEO. Should I put my Roth on Spider calls expiring tomorrow? I can't give you an answer to that question. I know absolutely nothing about you, and I don't trade spiders. So you're asking the wrong person the wrong question. Sorry. AEO. AEO. Here's another one doing the same thing. Okay? Last 30 days. Okay, here's your last 30 days. Shot up, come down, back up, profit taking, wait for a new bottom with AEO. Same thing. You just look at the chart. What is the chart telling you? The chart's telling you she's coming down. Okay, she made a little retracement here. That was a nice move from 950 to almost 1175. That's over $2. Well, yeah. Well, $2 on a $9 stock, that's over 20%. A 20% increase, yeah, there's going to be profit taken. Okay, so now we're coming down. Eventually, we will be done with profit taking, and then it will start to go back up again. Just keep your eye on it. It's not just the numbers. It's just not the dollar amounts or the pennies or the nickels. You have to look at it from the idea or from the vision of someone who's looking to gain a profit. Okay? The bottom is here. You can't argue with it. Very next day, she jumps up and she shoots all the way up. Made a 20% move in 2 days. So you don't take your profits, you don't deserve to have them. It's actually that simple. It's not a profit until you take it. Nobody ever went broke taking profits. Fair enough, Rob. Pete, so what do people need the most and are willing to spend $1 on besides food? Food, shelter, clothing. So how much for your course? I don't have a course. Isn't that weird? I don't have a course. I'm just here sharing information for my children and my grandchildren somewhere in the future. Now, my grandson's only 5, but when I'm gone, he'll at least have videos of what Papa G used to do. This is what Papa G is doing. It'll be a video log for my children and my grandchildren. Okay, you just get to happen to be here and answer questions for you. I used to have a course years ago, but it's old. All right, let's keep on going. But Pete, if you want to join my morning trading group, there's a link in the bio somewhere. Bill, how much fines on paper payments is on TGAS, but it is okay for some other ways that you can see? All right, Bill, I have no idea what TGAS is. Is it a stock? TGAS. No, it's not a stock. So I have no idea what it means then. Oh. Well, I got somebody sent me an email. It pops up on my screen anytime someone sends me an email. The numbers can be made up. Holy cow. You mean every single financial website I go to is not the same information? Yeah, and I'm well aware that unaudited returns don't count. I'm well aware of that. It still doesn't negate the fact that that's how much money I made. Okay? I understand exactly what you're saying because I've been putting my returns in since 2011, I think it was. Hold on a second. Where is it? my trades for 2024. Go all the way down to the bottom. Okay. Starting date, August 31st, 2011. That's how long I've been sharing my trades. And yeah, I understand they don't count unless they are, what do you call them, audited? I get that. I just have no reason to have them audited. Okay, I'm doing trades. If it makes sense, if I'm profitable and you like it and you're curious, fine, join. If not, don't join. It's actually that easy. I'm not trying to sell anyone anything. All right, let's go back to there. All right, next, insane results. Yeah, I know it's insane. I've never seen returns that high in the first quarter for the trading strategy that I am doing. Now, there are other trading strategies out there, but a covered call on weekly options, yeah, 1 or 2% a week. Well, yeah, that's only 13% per quarter. Okay, yeah, it's unrealistic, but it happens. All right, it is what it is. I joined. You have a good heart. Thank you, Pete. I have 3 grandchildren, 9, 11, and 16. They all trade. Never too young to teach them. Oh, Alberto, you're new here. Okay. Brickstar, he is dead. You know Jim, the homeless guy. What do I do with his body? Okay, cool. Technicals, fundamentals, or both? Actually, Jamar, both. Because fundamental trading, looking at the fundamentals of the company, are they consistently profitable? Do they have a good cash flow? Do they have good management? Do they have a good track record? Those are fundamentals. The technicals, well, I don't want to buy at the high and I don't want to buy it at the bottom. I don't want to buy it as it's dropping. I want to buy it as it's advancing from the bottom of the turn. Stocks go up, they turn and start going back down again. They find a bottom and turn and start going back up again. They go up, they go down, they go up, they go down. So if I find a good company that I like, I will keep my eye on it and I will watch it. 30-day high, usually followed by profit taking. Stocks drop. As it hits a bottom, it will slowly turn around and start going back up again. It's very predictable if you keep an eye on it and get familiar with the company that you are investing in. If you are going to put your money into a company, don't you think there's never too much information when you're putting your money into it? Well, I'm very simple. I get 2 criteria and only 2. Consistency of profitability and weekly options. That's it. That's the only 2 criteria. Well, watching for the signal to get in. Well, is it at the high? Is it going up? Okay, fine. Is it dropping? Yeah, fine. Well, I want to know where it is and where it's going. So by looking at it, you should have a good idea. If you are halfway decent at noticing a pattern, high, low, up, down, it's at the bottom. Where do you think it's going next? As it turns around, usually it goes back up again. When it gets to the top, stops going up, it starts turning around to go back down, then it's going back down again until it's done. That's what stocks do. They go up until they're done. And then they go down until it's done. Okay, Tay Sanders, will JetBlue go up to 380? I don't know. I don't do JetBlue only because they haven't been profitable long enough for me to be interested. Okay? Why do you answer this, poor Dan? Why do you answer this, poor Dan? I don't know. Who's poor Dan? All right. Can't do 1% a week. All right. If you can't do 1% a week, you do what you think is right. Okay. If you think you cannot do 1% a week, well, I'm not quite sure why you're still here. Burn Dog, do you have advanced? Yes, Burn Dog, I do have advanced auto parts. Oh, Zach, 1% a week, why so low? Safety, predictability, and consistency. 1% a week comes to over 50% per year. I'm at a point in my life where I don't want to take risks The stocks that are not risky, almost risk-free, they don't move a lot. So there's not a lot of space to make a lot of money with a company that doesn't move a lot. I'm looking for predictability, safety, and cash flow. When you make trade-offs, you have to make trade-offs. So for a simple, safe, predictable, consistent, no way for me to lose strategy, I'm perfectly happy with 1% a week. Okay, when you get to a certain point in your life, Zach, okay, by the sounds of it, it doesn't sound like you're retired. It sounds like you're still working. Nothing wrong with that at all. Nothing. But at my point in my life, I have two opportunities. One, invest myself, or two, give my money to some money manager or someone to manage for me. No, because I've never seen a money manager who has more interest in my money than me. Secondly, I've never seen a money manager who consistently gets more than 30 to 40% per year. Now, I heard of a couple, but you have to have hundreds of millions and billions of dollars to invest money with those guys. Sorry, I'm not there. That Silva guy, you've been doing more than 1%? Cool. Well, I've been doing more than 1%, but that's my goal. My goal is 1% a week. Next, here we go. Nice info. Which 3 stocks did you recommend? I don't recommend any stocks. Okay. Amador Ramirez. Oh, Amador. Okay, Amador Ramirez. I don't make recommendations. Okay, I just point people in certain directions. The stocks that I like: dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then what's on Warren Buffett's list. Those 5 lists right there will give you more than 300 companies that are consistently profitable or owned by Warren Buffett. That makes sense to me. Okay, everybody has to decide what makes sense to them. Does that company make sense to you? Is that where you want to put your money? Lance Dean, what do you think about Pilgrim's Pride? Never heard of it. Okay, I like companies that are consistently profitable for a minimum of 2 decades. So 2 decades is 20 years. If Pilgrim's Pride has been profitable for 2 decades or more, they will be a dividend king or a dividend aristocrat or a dividend champion, and then not, because I know almost all of them that fit that parameter. How much do money managers get? Well, money managers usually get a maintenance fee, which is about 2%, and then they get a portion of the profits, usually, unless it's one of those money managers that work salary, not commissions. How much is a safe amount total to invest? All right, Alex Tracy. What I'm doing, I'm taking my retirement money. Okay, so at the point when you retire, money has to come from somewhere. Either Social Security, a pension, or 401k, or some kind of investment that pays you on a monthly basis. Okay? So that being said, you've got to decide, are you going to do the investing yourself, or are you going to give all your money to someone else to invest for you? I'm just showing what I do. Okay, I'm retired, so I need income coming in. I have choices. What I'm going to buy: CD, 1.5%. Buy a treasury bond, get 5% per year. Or put it into an ETF, get 10, 15% per year. Or savings bond, get 7% per year. These are the opportunities that are available to the average person, unless you want to do it yourself. So I decided a long time ago to do it myself. So consistently, I make over 1% every single week using a strategy I created for my 9-year-old. And I haven't shown this in a while, so let's take a look today. Right there and right there. Right here, YouTube. Let's go to YouTube, and I'm going to show you who I created this trading strategy for. Live. No, I don't want the live. I want videos. Sorry. Videos. oldest videos.
It's you being part of my internet website called Thingy. Hi, I'm JC, and me as you being part of my internet website called Thingy, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of...
There's over 20 days.
That's me 15 years ago. Look at all my hair.
What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
Yay!
Seriously.
Okay. So in 2008, my daughter jumps on my lap and says, Daddy, what are you doing? Can you teach me? Okay, so most adults don't know how to invest. So how am I going to teach a 9-year-old how to invest? It has to be simple. It has to be safe. It has to be predictable, consistent, and no way for her to lose. So 5 criteria that almost seemed impossible to figure out. Okay, great. So rule number 1, 5 rules. Rule number 1, never buy something that doesn't make sense or you do not want to hold for the rest of your life. Never, if you don't want to hand it off to your children and your grandchildren, don't buy it. That's number 1. Never buy something you don't understand. Number 2, never sell for a loss. It defeats the purpose of the whole game. And yes, it is a game. Okay, just learn the rules. It's not that difficult. Number 3, make sure the company is consistently profitable. These are my rules that I created for my 9-year-old. Make sure the company is consistently profitable. I don't want to put my money into a company that doesn't make money. It's that simple. If the company's profitable, great. I want 2 decades of consistent profitability. It just makes sense to me. Okay, it doesn't have to make sense to you. You guys do whatever you want. For me, it's got to make sense for me. 2 decades of profitability. 4, weekly options only. I want weekly cash flow. The only way to get weekly cash flow are 2 ways. Sell something every single week. That's where weekly options come in. Or sit in front of the computer looking for highs, looking for lows, and making trades that way. No, thank you. Okay, so basically there's only one way for me. Find something I can sell once a week. Okay, that's a stock option. All right. Rule number 5, make sure the numbers work. Now, as soon as we find a halfway decent trade, I will show you exactly what I mean. It's not that difficult. All right, that silver guy. I'd like to know what you're doing, dude. Tubby berry. It's plenty. It's plenty if you have a high enough capital. Well, I'm retired. Okay, now I'm assuming, this is just an assumption here. Some of you may be retired. Some of you may be close to retirement. Some of you may be decades away from retirement. So here's the thing. If you're decades away from retirement and you can see the possibility of doubling your money every 14 to 16 months, well, why the hell wouldn't you? Yeah, you're going to have to spend 5 or 10 minutes every single day. Well, you take a shower every day. You eat every day. You sleep every day. Why not take care of your money every day? I don't know. Why don't you? Eat the Rich. Love that song. What does your daughter do now? Believe it or not, my daughter works with dogs. Okay, when my daughter was 9, great. She was my shadow. Great. Up until 13. At 13, I was just an ATM. Sorry. And any of you guys have daughters or you are girls, you know exactly what I'm talking about. Your dads are great up until 12 or 13. Lemonade. Do you think we hit bottom or do Democrats have more to go? Ooh, that's an interesting question. Hey, Austin's in the house. All right, Elson. Uh-oh. All right. All right, so Rob, new to investing. Rob, what you're doing, wait a second. I wanted to look at VTI, VXUS, SCHC. I already know what a piece of crap that is, in my humble opinion. Okay. Is that Michael or Michelle? That's Michael. Is it possible to do your system and not trade first thing in the morning? I live in Pacific time at 6:30 in the morning. Just checking. Well, you can trade anytime you want because they're all basically easy trade. But here's the thing. The most time value. Now, I basically sell time. Okay, that's what a stock option is. It gives somebody a time frame in order to do a certain action. Let me explain. AT&T is currently at 27. See that? $27. If I buy it at 27, okay, I sell somebody the rights to buy it from me at a certain price by a certain date. So listen to the equation and see if it makes sense. Currently, at this moment in time, the price, AT&T, $27.02. So if I buy it at $27.02, that means I can do whatever I want with it. Well, what if right after I buy it, I sell it to somebody else using a covered call, which basically means I'm giving them the right, not the obligation, the right to buy it from me at almost the exact same price I just paid for it for 1 week. 25 April 25. That is next Friday. So if I buy it tomorrow morning, I'm paying $27.02. I will then immediately turn around and sell it to someone else using a covered call. Now, for those of you who don't know what a covered call is, it's kind of like layaway or a non-refundable deposit. If you like a product, you like something, hey, I like that. Let me give you $50. I'll be back in an hour. I'll be back next week to pay for the rest of it. Layaway or a non-refundable deposit, same thing. Okay? So whoever buys the option from me, they are going to pay this price, the ask price. I am going to receive this price, which is the bid price, bid and ask. Okay, it sounds a little confusing, but think of it this way. If you go to the grocery store, let's say the grocery store is the stock market. Let's say that the owner of the grocery store, the cashier, is the market maker. Okay, he's going to buy a gallon of milk for $3. He's going to sell it to you for $3.50. Still the same gallon of milk. Okay, you can go someplace else and get it someplace cheaper. You can go someplace else and get it someplace more expensive. But the owner of the store will go to the farmer and buy the gallon of milk for $3. He will then turn around and sell it to you for $3.50. That's basically the stock market. The current value, $27. If I buy it for $27, I can sell it to someone else for $27. They are going to pay me a premium of $72. Well, what is 72 from 27? Well, let's figure it out. And by the way, that 72 is 72 cents per share, every share. Okay, so to do one option, you need 100 shares. So 100 shares at 72, that's actually $72 per contract. Well, what is it costing me? Well, let's do one on AT&T just so people can see how it works. Okay, we're going to do the 27, so let's get this out of the way. Let's change this to covered stock or covered call, same thing. Okay, now, remember I said the 27s? The 27s is right here. Okay, now I love this trading platform. Okay, it's owned by Charles Schwab. I've been using it for over 20 years. One thing I love the most about it is they haven't changed a thing in 20 years. It's all the exact same. You can go look at some of my videos from 2011, 2012, and you can see me using Think or Swim, the exact same setup. Same thing. I'm doing the same thing I did 15 years ago now. All right, anyway, let's keep on going. All right, first and foremost, I don't want to buy 1,000 shares. Let's just buy 100. Let's just do one contract. Okay, that way it's easy for people to figure out, well, if one contract is going to give me this, well, I have enough money to do 4 or 5 contracts. 10 or 15, 20 or 30. Everybody has a different budget. Everybody has a different risk factor. That's the word I'm looking for. Risk factor. All right, so now I'm going to change this from a limit order to a market order. Now, this is my reasoning why. Okay, a market order. The market maker is required by law to fill it at the market price whenever a market order comes. Now, a limit order, you can choose what you want to pay or what you want to sell for. You can choose the number. You can choose it. The market maker doesn't have to fill it. It can actually sit on the market maker's computer all day long and never get filled. That's why I always do market orders when I'm entering. Now, let me explain it. Let's work through it and see if it makes sense. I'm going to hit confirm and send. Here's the actual order, the way it sounds. Now, I always tell people, read the order out loud to make sure it makes sense. Lunar. RuneScape teaches stocks better. Thank you. And it also shows how BS it is. Thank you. This is just money doublers IRL. Okay, thank you. Money doublers are a scam, by the way. Oh, thank you. They are just take money and log off. Okay, Lunar, thank you very much. I'm not quite sure if you noticed, I didn't ask anyone to buy anything. Okay, I have videos going all the way back to 2012. I'm not hiding from anyone, and I use my real name, and my phone number is even attached to my website. So I'm kind of offended by you saying that, but you know what? I'm from Gen X. I really don't care what you think. Sorry, it is what it is. Either it makes sense or it doesn't. I'm not trying to sell anyone anything. Okay, you're all here free to do whatever you want. I'm just sharing what I'm doing for my children and my grandchildren. You just so happen to be here, okay? When I'm long gone, 20, 30 years from now, my children, my grandchildren will get to watch these videos and say, does it make sense? Oh, wait a second, AT&T is still in business? Well, yeah. AT&T is going to be here long after I'm gone. So if my children and my grandchildren can look in 20 years from now and say, me looking at AT&T explaining how this works, great. And you think it's not going to be relevant in 20, 30 years? Well, you're sadly mistaken. The stock market's been around for 400 years. I've only been playing it in for 30 years, okay? I've seen people come and I've seen people go, okay? A lot of kids I went to school with, a lot of people I went to school with, they're no longer here. The stock market's still here. It's been around since 1602. It ain't going anywhere. I'll be gone in a few years, but this will still be here. Anyway, 420 years. Dimitri, what stock is that? I'm late. Uh-oh. Uh-oh. What are we doing here? Schwab acquired it from Ameritrade. Absolutely. Why not the ask instead of the market order? Oh, Axiom's a great question. Market order gets filled instantaneously. I'm selling time. Let me explain what that means. Okay? If the stock stays the exact same, doesn't move at all, the value of the option will slowly decrease through what is called time decay. Okay? A weekly option gives you the right to buy the stock at a certain price at a certain date for a certain amount of time. Okay? The 25th of April, 2025, that expires on the at 4 p.m. on Friday. After 4 p.m. on Friday, whoever bought that option is SOL. Means you buy it or you do nothing with it. Whatever. They have the opportunity to do whatever they want as long as that option is active. Okay, so back to what I'm saying. If I buy this tomorrow morning, and I sell somebody the rights to buy it from me for the exact same price, one contract is going to get me $77. Now I know $77 is not going to change anyone's life, but listen to the whole equation and see if it makes sense. At some point in time, you will retire all the money you have saved up in your working life. It's going to give you a return. They call it a fixed income for us old people. Yep, he's all good to go. He's on a fixed income. That's what they're talking about when they say fixed income. You work your life, okay, your working life, okay, and then you retire 60, 65, 70, 75, whenever you want to retire, okay? And then you draw a certain amount of money from your investments. You can do it yourself, or you can let someone else do it for you. But we've already said, most people are not going to have the same kind of attachment to your money that you do. Okay, so learn to invest yourself. That's it. Okay, so let's finish up this one. Now, all the information's right here. Buy one covered call, AT&T 100, that's the weekly, 25 April 25. That means it's going to expire by next Friday. That's it. After that, done and over with. The $27 call option against the stock at the market to open to open. Why does that say to open to open? Because it's 2 trades in one. Buying the stock, that's one trade. Selling the option, that's the second trade. But I'm only paying 1 commission because it's a covered call doing 2 trades at once. Okay, anyway. Maximum profit, $77. What's going to cost me? Total cost of trade, including commissions and fees, $2,623.66. Let's break out the calculator for those who can't do it in their heads. Calculator. Maximum profit, $77. Divided by the cost of the trade, including commissions and fees, $26.23. Divided by 26.23 and 66 cents. Gives me a grand total of 2.9%. That's almost 3% for 1 week. Now, I know it doesn't sound like a lot, but what does it mean at the end of the year? Was that like 105? 152%. Okay? So 2.9% comes to 152% for the year. Well, that's more than doubling your money. Well, when you're older, when you're retired, when you have to rely on a certain fixed income, okay? If I'm getting 1% every single week, it depends on what I'm starting out with. If I have a $100,000 account, well, 1% a week is $1,000 a week. Okay, $500,000, 500,000, what's $5,000 a week, which is over $20,000 a month, which is $250,000 a year. Okay, so for those that are retired, it makes sense. For those that aren't retired yet, you may have 10, 15, 20 years to go before you retire. So you got 2 choices, and only 2. Invest yourself, learn how to do it, that's one. Or say, you know what, you do it for me. Give it to someone else to take care of it for you. But I can almost guarantee that person ain't going to have the same amount of attachment to your money that you do. And they don't have your best interest in mind. Usually. All right, so let's keep on going. So that's AT&T. That's how a covered call works. You buy it for a certain price. At this moment in time, it's at $27.02. Okay? I then turn around and sell it to somebody else the exact same price, or almost the exact same, for a premium. Okay, it's kind of like doing someone a favor. Hey, I'm going to the store. You want to pick you up something? Yeah, great. Pick me up a case of beer. All right. And then they come back and they pay for it. All right, anyway. Thoughts on Bloomberg? I've never looked at the Bloomberg terminal, so I can't give you any thoughts on that one. Sorry. Is Lunar gone or kicked out? I have no idea. Guru, 1% per week is huge. People just don't understand the power of compounding. Oh, I'm going to agree with you. But I don't compound mine, okay? Like I said, I live off the interest of my investments. Okay, so if you did compound it, you could double your money every 14 to 16 months. Okay, most people will be lucky if they get 8 to 10% per year. Okay, this is a little bit different. And yeah, it's going to take a little bit of effort. Okay, but you eat every day, you shower every day, you make your bed every day, you get dressed every day. Okay, there's certain things you do every day because they just make sense. If your money doesn't make sense to you, then don't do it. Most people spend more time planning a weekend barbecue than they do with their personal finances. Okay, we live in an economy, we live in a world where we have to pay to be here. Okay, we're the only species on the planet. It's got to pay to be here. Anyway. Top that baby, what's happening? Wow, breakdown, VIP, I've seen all these. Alrighty, well, I'm missing these questions. Hit bottom, okay, yep, I saw those. AT&T, got it, yep, number 3, gifted back. Wow, 400 years, grifter, okay. AT&T, look at it. You sell calls or puts, I sell both, but here I only teach one strategy. Okay, I only teach one strategy here for free. Okay, I got to draw the line somewhere. I'm a nice guy, but I got to draw the line somewhere. All right, so let's keep on going. I was never taught about stocks. Most people aren't. Arch only existed only about 200 years ago. Stop with the numbers, please. Arch, oh my goodness. Website. Let's go to Google. I'm going to do a quick search. All right, who is it? Arch. Arch, are you ready for this one? Google search. First dividend stock, the Dutch East India Shipping Company. Modern stock market began in 1602 in Amsterdam. Okay, I've written 14 books on the subject. Please do not tell me my subject matter. Okay, if you have a problem reading, I can't help you out. But 1602 to 2025 is over 423 years. I said over 400 years. Okay, shoot me. But it's more than 200 years, dude. 1602, right there. Do your research yourself. Don't insult me, please. And if you're going to insult me, come with a little bit more ammunition than that. I was never taught about stocks. I am trying to learn so I can pass it on to my kids and grandkids, etc. Cool beans, Dimitri. I'm doing the same. Axion. Yes, time decay. Market order won't get faster than an ask. Yes, it will. Top that, baby. Cool beans, Brad. Yep. Lemonade. Are you a tax deferred account? No, Lemonade. I have my money in a corporate account, so that the losses of the corporation offset the profits of these trading. Top that, baby. So if no one buys your call, you keep the shares and lose the premium. Okay, top that, baby. Listen again. If the market maker posts a bid and an ask, he is required to fill it at the market at that moment in time. If you put in a limit order, he does not have to fill it. Okay, so if there's a number there is a buyer. That is the market maker's job. Now, the market makers make huge salaries, okay, but they do also have obligations that they have to abide by, and that is one of them. I save $1,000 every month. Cool beans, Curtis. Should I buy Bitcoin? I can't answer that question for you. I have no idea who you are. NVIDIA, I can't tell you that either, because I don't know what it is you're looking for. Only thing I can tell you is I don't do Bitcoin and I don't do NVIDIA. Okay, look at the numbers. How consistently profitable is NVIDIA? How often have they increased their dividends to their shareholders? Those are important questions. Do some research. Look, I'm planning on owning Ford. Any thoughts? Well, let's take a look at Ford. Ford. Now, I had Ford a couple of weeks ago, but it made its run. I got out. My hair looks terrible. Okay, anyway. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, sideways, down, up, down. Now back up again. What's going on here? Well, let's take a look. A year ago, Ford sitting at 12.16. The high of the year is 1480, was it 83? 1485. Okay, look at the last 90 days. Okay, last 90 days, same thing. High, low, where was it? Where is, look at the motion. Up, down, up. What's going on here? The distance between here and here, yeah, profit taking today, yesterday and today. So no to Ford for this week. Okay, where was I? Hold on a second. Yeah, whoops. I see. I bought Ford around here. As soon as she got up to here, I got rid of it because I don't hold on to it as she's falling. I find a profit. I'm okay with the profit, then I move on to the next company. Because once you go from here and start going up, once you get past 5%, 10%, 15% profit, there will be profit taking. And when profit taking comes, stocks drop. Or, where is it? Right here was panic selling. Okay? Trump did that, what do you call that thingy? That tariff crap. And the stocks dropped. That's called panic selling. Okay, got down to here, people jumped in, and she shot up. She shot up so much, you had people like me say, ooh, look at that profit, I'm out. And then the stocks drop again. Okay, let's keep on going. What are we doing? Dimitri, thank you over there. Best thing I learned from your channel, buy a lot of stocks from one or two companies and have existed for at least 2 decades. Watch their history, wait a while and reap the reward. Pete, that's awesome. Make sure the company isn't a dump. Pete, I couldn't have said it any better. But Pete says, make sure the company isn't a dumbass. All right, that makes sense. But think about it, Pete. If you work 30, 40, 50 years of your life and you put what, 10, 15, 20, $100 a week away, at the end of your working life and you're ready to retire, you should have hypothetically anywhere between, 50,000 to 200 to 300,000. That money's going to last you for the rest of your life. So what are you going to do with it? Are you going to do it yourself, or are you going to entrust your money to someone else? I looked at the numbers. There wasn't a single money manager that offered more than 30% per year. Well, if I can do 50% per year, why would I give my money to someone else? It just doesn't make sense. Do you have a minimum on market caps for companies you invest with? Lemonade, okay? Let me see if I can repeat this again for like the 5th time tonight. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. That's all the companies I like. There's no caps. Okay, remember, I showed you the video like 5 minutes ago. I created this for a 9-year-old little girl. It had to be simple, safe, predictable, consistent, and no way for her to lose. Adults have a tendency to make it more complicated than it needs to be. You can go to YouTube, check out the history, the videos I've done. All the way back in 2013, I'm saying the exact same things. And I'm showing the exact same trades I did 15 years ago. Well, I'm still doing them nowadays. Well, Ford has been around for over 100 years. Do you think my 30 years is really going to matter? No. When I'm gone, there'll still be Ford. There'll still be Coca-Cola. There'll still be Consolidated Edison. These companies will still be here, even though we won't. But are they going to be run efficiently, consistently? Well, if they have 100 years of history, a proven record, well, yeah, works for me. I'd never trust my money to someone else. We're a dying economy. We need to fight it ourselves. What are your thoughts on OXY? Ooh, Occidental Petroleum. Let's take a gander. OXY. Interesting. Well, look at that. We were looking for a decent trade, and here is one. All right, hold on a second. All right. I look at everything the exact same way. A plus B equals C. All right, first thing I want to look at is the 1-year chart. Where's the high? Right there. Where's the low? Right there. Where was it a year ago? Where is it now? And what direction is it flowing? Okay. Down, up, down, up, down, up, down, up, down, up, down. Now she's going back up again. Found the bottom. Could this be the bottom of the year? Yes, it could be. Okay. It could be. All right. A year ago, we had a high at 68.52. Okay. The last 90 days. Okay. Last 90 days. High, low, was, is. Okay. Down, up, down, up, down. Now she's going back up again. But how high is it going to go? Well, let's look. Let's zoom in a little bit closer. Okay, here's your 30 days. Easy to see. Okay, up, down, up. Simple. Bottom is here. Top is here. Is that enough for profit taking to start? I don't know. Let's get a little closer. Okay, we bottomed out on the 9th, which was last week, 34.83. That's the bottom, 34.83. Well, today's high was 39.30. So from 34 to 39 is $5. 34, 39, yeah, $5. Well, $5 on a $30 stock is 17%. Okay, a nice little move. Could it go up higher? Yeah, it could. But you can't really count on this right here because this is panic selling. Okay, people panicked and they sold, found the bottom here. Now she's going back up again. Does that make sense? And that's the big question. Out of all the questions you have rattling around in your head right now, the number one question should be, does this make sense? It either does or it doesn't. Pick a good company. Is Occidental Petroleum a good company? Well, let me give it it's on Warren Buffett's list. A little bit of it. It's on Warren. If it's good enough for Warren Buffett, I'll buy it. If everything looks right. That's the big one. I will buy it if everything looks right. Okay, well, what do we need to look at? Well, we need to look at where is the money flowing. Are investors jumping into this or are they jumping out of it? Well, the high was 3 weeks ago? Bottomed out last week. Now she's going back up again. You can argue all you want, but those are the numbers right there. Lemonade, do you have a minimum on market caps? I don't do market caps. I thought we already talked about that one. Can we look at Coca-Cola? Matt, good evening, and how are you today? Any thoughts on ExxonMobil? Okay, hold that thought. We got a whole bunch of people over here on TikTok. What are these guys saying? Elson Rivera, would 2% be greedy if starting with a small capital? Elson, I can't tell you what to do, okay? If you want to hunt down for 2% on a weekly basis, great. Will it work? Yeah, maybe it will, maybe it won't, okay? I do a covered call because it's simple, it's easy, I'm in and out, and I don't have to think too much about it. I like what that silver guy says. It's not greedy at all. 1% is the target, but some trades can get you 2 to 3%. He's absolutely right. Okay, Pete, I'm going to take a look at ExxonMobil, and I'll take a look at Coca-Cola. Just give me a minute. How do you get started investing in dividend stocks? Gavin, how are you today? Okay, we already did Walmart. Austin, good evening, good evening. Okay, Druber Goober, ET, Energy Transfer. I don't do Energy Transfer only because the premiums aren't as good as they used to be. Okay, when they stop paying a good premium, it doesn't become cost effective. Now, don't get turned off by ET. If you like it, fine, you do it. But Druber Goober, there are 10,036 companies. Why are you fixated on one that the numbers just don't look good? DA Slurp, is Forex, options, futures, stocks overall better? Better than what? Not better than chocolate ice cream. Might be better than vanilla. B-Rad Daddy, hey James, what's the best way to learn calendar vertical diagonal options? The best way to learn is by someone who's proficient at it. Okay, I don't do any of those. Now, I used to do verticals, but I don't do those anymore. And I used to do calendars, but they're not as consistent as the covered call. So I stepped away from them. Because every time I made one loss, I had to make 3 wins to offset one loss. It was a lot more work than it was worth. All right, Matt, hold on a second. I want to do a few more questions over here in TikTok before I look at that. Eleanor Sinclair, good evening, good evening, good evening. Aaron wants to take a look at British Petroleum. Okay, BP. Well, look at that. That is definitely interesting. Let's look at British Petroleum for a second. The high, the low, where was it, where is it? Look what's going on. Down, up, down, up. I want to zoom into here. I just zoomed into it. It looks kind of interesting. Well, let's take a gander at it. Okay, a year ago, British Petroleum's at 39. Okay, last 90 days, okay, the high, the low, where was it? Look at this, up, down, down. Now she's going back up again. What happens when a stock drops? It finds a bottom, turns around, and goes back up again until it stops and goes back down again. So does it make sense to jump into this one? Right? 30-day high, 30-day bottom, now she's going up. Okay? Do you see how they're red? Okay, the market maker is setting the opening price, but we, the buyers, are saying something else. You cannot just, I mean, even though there are 3 down days, the stock price is still going up. All right, well, let's take a look. Does it normally go up this time of year? For that, we're going to use the seasonality chart. Okay, so January 1st, all the way to the left, December 31st, all the way to the right. The blue line represents the movement this year. The red line is 10 years of average movement. 10 years. 2015, 16, 17, 18, so on and so forth. Right here is where we are now in the middle of April. What's going on usually this time of year? Click left, drag right. All right. Looks like British Petroleum is coming down and then going back up again. All right. But the stocks are showing something totally different. Now, seasonality is great, but it doesn't guarantee everything because nothing supersedes the trend. The trend sideways, down, now it's trending up. Okay, it is what it is. It is going up. Argue all you want, but 1, 2, 3, 4, 5, 6 days ago, there's the 30-day bottom. Now she's going higher. Does it make sense? I don't know. Do you like this company? That's the big question. Does it make sense? Second question, do I like the company? Third question, am I willing to buy this company and hold it to the day I die, sell covered calls every single week to get that cash flow until it hits my target price? Well, my target price, $27.66, I'd be doing the 28s. And the 28s are paying 48 cents a share. Now, 48 cents a share on a $28 stock is over 1.5%. Okay, now the numbers are going to change when the market's open. But a rough idea, because the math never changes. What do I buy it for? What's the closest strike price? What is that giving me in a return? Is it more than 1% or less? Do I like the company? Does it make sense? Is it consistently profitable? These are simple questions. It was created for a 9-year-old. Simple, safe, predictable, consistent, 1% per week. Not that difficult. What about oversold stocks with no dividends? Worth a chance? Okay, Lemonade, if it no dividends, I don't do it. Sorry. Okay, and if the company's got, all right, I'm repeating myself. All right, so I said we would look at Exxon. So let's take a look at Exxon Mobil. XOM. Okay, high, Low is, look at this, down, up, down, up, down, up. Okay, now it's going back up again. But what's the difference between the bottom and where we are now? Is there a possibility that profit taking might kick in? Well, let's take a look. A year ago, we're at 119. The high of the year was 125, and that was the beginning of October. The last 90 days, here's the last 90 days. High, low is, look at this, sideways, up, down, now it's going back up again. Okay, do you like ExxonMobil? There's a big question. Is it worth putting your money into and holding it until the day you die? Does it give me a nice premium every single week? Well, let's check that out. We're currently at 104. The 104 is going for 249. That's over 2%. Well, if I can get 2% every week, hell yeah. 1% every week, yeah. Now, if I buy ExxonMobil, will I ever sell it for less than what I paid for it? Me? No, ever, never. I will take a covered call every week, but look at the numbers. At the money, 249, that's over 2%. One strike out of the money, the 105, it's paying 196. That's 1 3/4%. The 106s, two strikes out of the money, it's paying 150. That's close to 1.5%. Three strikes out of the money, the 107 is going for 112, still over 1%. I love the premiums on a company like this. Because the stock can drop, I can sell 4 strikes out of the money and still make over 1%. It's all math. You didn't pay attention in math class, well, you need math as an adult. Okay, we all know we have bills to pay every single month or every single week. That's what your algebra came in handy for. I didn't see where I can join your morning group. What is the average time you buy before the EX dividend date? 2 weeks. Okay, lemonade. No. Okay, lemonade, the 10-minute trader. Okay, right there. You click on that, live trading online. That will take to my Patreon, which says Dividend Stock Talk. Okay, right underneath it is my books. I've written 14 books. Yay! Yeah, that link doesn't work. Not yet. Okay, I'm very slow when it comes to this technical stuff because this is a hobby for me. This is not a business. This is just a hobby. You can marry a rich woman. Yeah, you could. Music spot, Coke, COKE. What is the average time you buy and sell on TikTok? Okay, it's it's the10minutetrader.com. And on TikTok, top left corner should bring you right to my bio. And the link should be in the bio to the 10-minute trader. Well, let's go over here. Okay, we just looked at ExxonMobil. Now, oh, wait a minute, we didn't finish with Exxon. Yeah, okay. So it's currently at 104. Yeah, we did. We did all this already. The 104s are going for, yeah, all those nice premiums, nice fat premium. Okay, Music Spot wants to take a look at Coke, COKE. I think we looked at this a while back. Okay, so Music Spot, you see this right here? No options. Okay, some part of the requirements, consistently profitable weekly options. Okay, that's a no. What is a company that you would avoid, like a dime store prostitute with too many? I'm going to ignore that question. Kind of funny though, Pete. Just because of the spill of New Orleans, they cleaned up. It was quick. Yo, I got that. Thanks again for the info. You're welcome. How does your strategy change when stock trades EX date? Well, stocks have a tendency to go down in price after the EX date. Matt, I'm curious, why do you only do dividends? I know quite a few traders are big into it, but what is your thoughts? Why do those compare to everything else? I know it's a lot, but no, you got it. Okay, hold on a second, Matt. I'm going to show you something, Matt, and see if it makes sense to you, right? Matt, do you see this right here behind me? This is called an EX dividend calendar. It's just like a regular calendar, okay? Monday, Tuesday, Wednesday, Thursday, blah, blah, blah. April 2005. All these little green dots. That represents companies that have dividends and get ready to pay. These are the EX dividend dates, which means this is when they pay out their dividend. See how they're scattered around? Ben Franklin, Nucor, Cardinal Health, General Dynamics, Clorox, Abbott Labs, Hormel, General Electric, Procter & Gamble, Caterpillar. Okay? Nice, wonderful companies. Now, reason why I like dividend stocks, specifically those that consistently increase their profits, besides that reason, just before the dividend date, pick anyone, just before the dividend date, the company's stock value has a tendency to increase in value. The price goes up. So if you know when the stock goes up, now you have a huge conundrum. What trading strategy do you use? If you knew when a stock is going to move, what trading strategy would you use? Because each trading strategy has a risk-reward ratio. The simplest and easiest is just buying the stock. It also has the absolute worst rate of return because the stock has to go up in order for you to make money. Well, what trading strategy can you trade when the stock doesn't have to move at all? Covered calls and spreads. I love spreads, I do. There's a lot more risk in spread trading. Okay, you can make, quite a lot. Anywhere between 25 and 75 to 100% on a weekly basis with a spread trade. However, you can also lose. So my historical performance with spreads, I'd rather just stay away from them because they're not as consistent as the covered call. Now, the covered call, the rate of return is less, but the stock doesn't have to do anything. It can stay exactly where it is, not move at all, and a covered call will still be profitable. Simple, safe, predictable, consistent, and no way for my 9-year-old daughter to lose. That's the trading strategy I had to come up with. Well, I'm okay with 50% per year. Perfectly okay with it. There are other trading strategies that are more profitable and more consistent. But consistency, safety, and cash flow are my priorities at this point in my life. All right, we're almost at 11:30. No more stock stuff. I'm just going to answer questions. Okay, so Matt, hope that answered your question. Okay, over here. Striker, good evening. David, what's happening? Blue, a resonant storm. Cool beans. Wesley, how are you doing? If it were that easy, everyone would be rich. No, Wesley, they wouldn't. Some people are just lazy. Some people are entitled, think you should give it to them. And some people don't want to put any effort into it. So no, it's not that everyone would be rich if it was this easy. Well, it is easy, but you do have to put some effort into it. How many companies do you need to make a good $1,000 a week? Well, I have in my accounts anywhere between 5 and 8 stocks, and I make well over $1,000 a week. You're asking the wrong question, Mark. Okay? Okay, making $1,000 a week is not that difficult, depending on what you're starting out with. If you're starting out with $50, no, it ain't that easy. If you're starting out with $1 million, yeah, it's easy. So you got to ask a better question, Mark. Yep, I appreciate it since shined a bright light on a matter for sure. Okay, cool. Thank you for taking the time. Most appreciated. Cool beans. Yeah, it's 11:30. I'm getting ready to leave. And I'm almost done with all the questions. Do you know what 20 times 20 is? Okay, yeah. Smack, smack, smack. Okay. Card more game. Sergio. Forget that person. Not a problem. Mary June. Good evening. Bill, I would probably have the same percentage from you, James, when I retire because I would same as you. Okay, cool. Guy. Is volatility highest before or after dividends are paid? Well, that's interesting. There's no way to tell until they're actually here. Great explanation. Sergio, glad you like it. World you want to live in, girl. Nice to see you again. Andre, if it's 2702, what would you sell it? 2702? No, I'd sell it 27. Okay, or exactly what do you mean? Okay, so Andre, I see what you mean. You're using semantics. 2702, I'm going to sell it for 27. Okay, I'm going to lose 2 cents. Well, however, that 2 cents is offset by the premium I'm collecting. Is the premium going to be more than 1% if I sell it at 27? That's what I'm looking for. What am I walking away with? So Andre, whenever you look at a mathematical equation, there's certain things you know and certain things you don't know. Well, what I do know is 2702 is the purchase price. What I also know is currently the $27 strike price was paying 70, whatever it was. Okay? So then you go by what happens between when you buy it and the option expires or the person exercises it. There's a lot can happen in that plan. What's your favorite indicator combo? Consistency of profitability and weekly options. That's my favorite indicator combo. Tasha, good evening again. Sayar Crypto. Tasha, why do people say they will be millionaires? I don't understand. Okay, I don't understand either, Tasha. I'm in the same boat as you are. Because you'll never average 50%. Thank you for that. You could be right. Reciprocal tariffs and tax imports in 18 files that have been sent by the government. Bill, totally off topic. I don't want to talk politics. I don't want to talk religion. And I appreciate that. Thank you. DCB, what percentage do you lose when you lose? Okay, so DCB, I have 2 losses so far this year. One is a straight out loss. The second one, I'm working it back, so it's actually going to be a profit in a couple of weeks. Angie, isn't your premium less when you roll it? It is opposed to letting it expire. Sometimes yes, Angie. Most of the time, no. Because remember, Angie, when you're rolling on a Friday or a Thursday, you're getting the premium of next week's option. Not 5 days, but 10 days. Okay, because when you sell on a Friday or you let it expire on a Friday, okay, you lose the possibility of the premium for Friday, Saturday, and Sunday. That's 3 days of premium you're missing out on. So when it comes time to roll it forward and you decide, should I let it expire or should I roll it forward? It's a mathematical equation. What did I buy it for? What did I sell it for? If I roll it, what am I walking away with? What are the odds and probabilities of me letting it expire and then selling it on Monday? Will I make more then? It's very hard to answer that question because we don't know what's going to happen over the weekend and we don't know what the premiums are going to be on Monday. There's an old saying, a bird in the hand is better than 2 or 3 in the bush. Lemonade, yes and no. For the most part, I'm not a stickler for paperwork. Hate paperwork. I look at it this way. If If I have $100,000 in this account and I make $1,000 a week, I'm good. Okay, I'm not looking for the punctuation. I'm not looking for dotting the I's and crossing the T's. Did I make my 1% or did I not? That's what I look for. Did you ever look at Coca-Cola? Not tonight. All right, Samuel, would you get 100 shares of XYZ stock in order to keep the wheel going? Well, if it was financially feasible, yes. Does earnings usually burn premium? No. Earnings have nothing to do with premium. Okay? The premium is premium is the amount of money you receive or you pay for a stock option. It's got nothing to do with the earnings. The earnings has to do with the company being profitable or not. Okay, that's the earnings. What's the company made? When it comes to the stock, when it comes to the stock option, that has nothing to do with it. Okay. Bill, is there on OTEs for the forecast from David Allman was from last week ago for the time works? All right, Bill, I think you and I are on two totally different conversations. I have no idea who David Allman is. ODT is, I have no idea what that is either. OD. Anyway, Kevin, how are you doing? Bill, James Quincy did investment on his company to grow more profitable than his workers. Okay. Bill, sometimes I'm not quite sure what conversations we're having. The Silver Guy, anything above $45, I'm always hesitant to do calls on for the same reason. Thank you, Silver Guy. Mrs. Dietz. Ooh. Check CLM. Yeah, cool beans. I've looked at CLM before. It was a no. The 31 general date looks so familiar because the traits inside was different from the start. Okay. Nice guy. I have 6 call options that expire tomorrow on AEM with $125 stock, 25 cost basis. What would you do? Okay, nice guy. I'd actually have to take a look at the stock and I'd have to look at the trade because we've done this before. Okay, you ask me a question. If I don't have the whole picture in front of me, I can't speak intelligently about the conversation, or I can't tell you what you want to hear because I'm not seeing the whole picture. Matt, how much money do you have in total in the markets, and how do you bounce back when you take a massive loss? Well, number one, Matt, the loss I took this year, I think it was only like 3,000 or 4,000. That was it. That one. Okay. One of them was a $5,000, but it's not a loss because I jumped back into it and I did a couple other trades so that I didn't have a loss. I actually took 2 losses. One of them, total loss. The other one, see, not really a loss because I'm reworking it to try to get that loss wiped out. I don't know if that makes sense, but that's what it is. Capricorn Cutie, how are you today? Christ Moneymaker, good evening. Nice to see you again. Thanks for all the info. You're welcome. Oh, look at this. We are done. The last 4 or 5 questions. Margin call coming. Cash balance negative. For you, maybe, not me. So you asked how much money I have in my account. Well, at this moment, I have 80% invested. I'm leaving 20% as a cushion just in case I get a margin call. Now, I got 2 margin calls 2 weeks ago. Not a problem. Took care of them. Not a big deal. What happened to implied volatility on the option expiration date? I have no idea which expiration date you're talking about and what implied volatility we're talking about. It changes every day. It changes every few minutes. If you sell XYZ stock in less than a year, what are the tax? I was wondering if I was going to go the whole night with nobody asking about taxes. Here we are getting ready to close out the night, and we got our first tax question. All right. Samuel, are you ready for this? Samuel, when somebody asks me about taxes, I equate that or I compare that to somebody going into a Rolls-Royce dealer or a Lamborghini dealer and saying, hey, What kind of gas mileage does this thing get? It doesn't make sense. If you're making money, a lot of money, the first thing you need to do is coordinate a strategist or a tax planner, because it is your legal right, your responsibility to pay the least amount of taxes legally as possible. Okay? There are ways of paying zero taxes legally. It's your job to figure it out. That 2,000-page book, the IRS code book, it's in there. Okay? Go to the IRS and, hey, if I do this, can I not pay taxes? If I do this, if I do this, if I do this, that book is there to help you not pay taxes. So you got to figure it out. How do I pay the least amount of taxes possible? BORR might be something worth keeping on your radar for the future. Not enough history yet. Garrett, there's so many companies that pop up every single year. And it might be. I honestly don't know. I've never heard of it. Quantum Antenna, how are you today? All right, Pedro, I thank you for that vote of confidence. I got a margin call this morning too. I sold some more Riley to get rid of it. Not a big deal. Okay, don't be afraid of margin calls. But also, do not do margin unless you understand what goes along with it. Views on JEPI and JEPQ at current prices. Okay, user 13379988877. Ask me tomorrow night. We're going to do this again tomorrow, so let's talk about that tonight. Want to talk about tax? Someone who can't pay it in America while probably end themselves. Okay, wait a second. Want to talk about tax? Someone who can't pay it in America will probably end themselves. Pete, I'm not quite sure what you mean by that. Pump and dump scams, I mean. Ooh, I hate those. So you hope your other stocks will cover your losses. Okay, thank you, Matt. Last question. We know pump and dumps are a big problem on the markets. What is your thoughts on it? Okay, I don't buy stocks that are subject to the pump and dump. Okay, the pump and dump is usually for new stocks, not very much history to them. I stay away from those. The tax system is killing us. Pete, thank you for that, probably. Bill, RTL, Group SA. I have no idea what that means, Bill. Never sell stocks for money. Borrow against them instead. Ooh, David, I love that thought. All right, that's the very last question. I am done. I am out of here. You guys, I'll catch you again tomorrow. For those of you in the morning trading group, we will see you. Bill, RTL is a stock? Okay. Bill, come back tomorrow. We'll take a look at it then. Until then, you guys have a great night. Netflix, NFLX earnings tomorrow. Cool, Garrett. Not in my roster. All right. Have a nice night, everyone. And over here, done for the night. You guys have a great night. See you again tomorrow.